Hello and welcome to another update video about Ethereum. Yeah, since the last update, the price, I don't think the price has done much since the last update. In the last video, I think we were already here and the price hasn't actually dropped any further. But the idea is still that this here, in the best case, in the absolute best case, is a larger degree wave 4 correction. So that we obviously completed the bear market low here in June 22. We're dealing with a diagonal pattern. We already witnessed many months ago that this chart morphed from an impulse into a diagonal, which was our first warning. I did mention many times that Ether was weaker than Bitcoin and that, with diagonal patterns, we have to be prepared for wave count changes. That's always a warning when a chart morphs from an impulse into a diagonal, because diagonals can be interpreted in many ways. This here is at best a diagonal pattern. We have 3 waves up from the June 22 low into the March high. And we now have a strong 3-wave pullback to this trend line, which isn't necessarily super reliable because really only 2 touch points, maybe 3. We are holding above the trend line though. So it was slightly broken, but I would say it's holding right now. You know, it was a long volatility, well, let's call it liquidation candle there, and it broke the trend line slightly, but the price did show us a rebound from the 50% retracement there at $2,097. I see it, as I said, primarily at the moment as the white count, but the trend is still down, so it might escalate into something more bearish. We have an A wave down from the March high, then a B wave as a triangle, probably. Okay, the B wave, that's the problem. The B wave could also sit here or here. That would change the assumption a bit. But if we consider the B wave is a triangle, then the C wave down is unfolding now and has already reached the ideal target. But then we need to look at the micro patterns to get an indication of whether a low is in or not. At least a local low, and we can take a look at that on the smaller time frame. But as I said, this is the best case now. In a more bearish scenario, which is the next bearish one, it's not the super bearish one, but it's the next more bearish one. It is the idea of the wave 4 as a triangle, A, B, C, D, E. And then the triangle pattern would still be unfolding, and the wave 4 here, as I said, would still be unfolding as a triangle. And we never finished the bear market, but the bear market actually unfolds as a triangle. It's not a new scenario. Both of these scenarios are not new. We talked about them before as valid alternatives. Should we break below, I think it was 2,800. And that's why we focus on these levels, because they are for risk management. So that also tells you how important stops are if you're trading short term, because the stop below 2,800, for example, would have, would have kept you safe in this case. But the thing is, the situation is very dynamic. So we now need to look at the smaller time frame chart. Before we do that, at the moment, it tells us bull market targets have been reduced, at least, you know, depending on what's happening now. I mean, essentially this 5-wave move up as a diagonal is only valid as long as we're holding 1,790. Below that level, we're likely dealing with a triangle. Then bull market can still happen, but will be much delayed. And if we talk about upside, I mean, 5,700 still possible, but anything above that would be a stretch based on the current chart. And looking at the shorter time frame, this is sort of the microstructure I shared earlier today on Discord. Here, the idea is that we have a B wave top. We're now in this C wave down of the larger wave 4 I just showed you. Yes, we reached the trend line here. You can see it. But it takes a break now above 2,530, ideally in 5 waves, to give us a first indication that a low is in place. So that's very important, a break in 5 waves, because if it's only a corrective rally, it could morph into a much more larger corrective structure. But the earliest indication that at least a local low has formed would be a break above 2,530. So that's the micro resistance based on the impulse to the downside that's unfolding here. So we have a 1-2 setup, a 3rd wave down. Even that 3rd wave could get another low. But important is to understand what is resistance now. As long as we don't even break above the red box there at 2,529, there is no low, okay? So that means the trend is down against it. And if we break above it, we can take a look. and then we can look at the structure and determine, okay, what is it? Is it maybe something more bullish, or is it just a larger corrective bounce in a still unfolding downtrend? Again, situation is very dynamic, and it's just important to be aware of the relevant levels. Have your plan, keep a cool head. The situation in the world markets in general is very dynamic at the moment. So a lot of sell-offs there. I think the stock market will not open on a positive note today. So, but yeah, that's the idea. You know, this is a channel and a channel for charting. So we're not really discussing like other stuff like politics or anything. So it's really just for charts. If you're interested in that, there are other channels who do that or that do that. But yeah, it gives you very clear levels. So resistance is clear. If it breaks, it would warrant a reinterpretation of the microstructure. But as long as we stay below it, even this third might get another low. And then if we zoom out a bit, I mean, the next support level is, let's go to the 4-hour. It was already pretty much touched, 2097 and then 1790. That's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.